So I think a default would be a positive, at least a near-term positive for Bitcoin, right? It would be just like when the banks began to fail and we saw Bitcoin really rocket to the upside. My issue with Bitcoin is that even when we had issues with some of the regionals where they were dropping 50% like 2 weeks ago, Bitcoin actually came down. And to me, that tells me Bitcoin doesn't know what it is yet. Is it a digital gold? Is it a risk asset? And so I'm in the camp that I think Bitcoin topped out at 30,500 recently, and I actually think we are going to head lower. I'm still in the camp that we're probably not making, we haven't made the bottom in Bitcoin yet.
Gareth Soloway, a popular technical analyst, suggests that Bitcoin's consolidation phase could continue for months, potentially extending into 2024. Despite last year's recovery, the leading cryptocurrency has faced volatility in 2023, mainly due to turbulent events affecting the U.S. economy. Currently trading at $26,200, its lowest price since March 17th, Soloway believes macroeconomic factors will continue to impact Bitcoin and other cryptocurrencies, potentially pushing its price down to $12,000 or $13,000 by year-end. Soloway also mentions the possibility of a drop to $9,000, indicating investors' excessive greed and risky speculation, as seen in popular frog-themed cryptocurrencies like Memiko and Pepe. This lack of a bottom suggests that the bear market has not yet reached its lowest point. If Bitcoin experiences a significant decline, such as a 65% drop from its current price, it could bring about the typical max pain associated with bear markets before a potential recovery and entry into a new bull market. Soloway predicts similar declines for the stock and commodities markets. In the following discussion with Michelle McCrary, Soloway highlights important price levels to monitor in Bitcoin in the coming months.
I'm in the camp that I think Bitcoin topped out at 30,500 recently, and I actually think we are going to head lower. 2023, maybe into 2024, the 9,001. But I do think by year end, it's very possible we could see 12 to 13, or at least double bottom at 15.7.
What would take Bitcoin then?
That's going to be risk. It's going to be risk adjustment, meaning that de-risking in the system. Bitcoin is going through this crazy period where people are just gambling on these coins, and I've said this before, but I've never seen
other coins.
Yeah, on the other coins, but it's all the psychology of it, right? It's when people feel like they can gamble and they can just sell it to someone else higher, and they know deep down there's no utility. That is not a sign of a bottom in a market like a Bitcoin bull market. It's the sign of a top. And so now if you expand that out and say, okay, Bitcoin is still a risk asset, well, what if the stock market does start to tumble? Where does Bitcoin go? And that's my thesis, is that we will hit a recession. The market doesn't think that the Fed won't come to the rescue. The market and investors are conditioned for now 10, 15 years. Every time there's a hiccup, the Fed prints money. I don't think they do it this time. And that is going to be a shock. It's going to revalue the stock market 20, 30% lower from here, and that will take Bitcoin back down. So I think that the Fed intends, like in their mind, they're like, we have to be hard about this. We can't let it get away from us. And I think they'll try to hold out. But just like always, eventually the Fed will print. But we're talking about them holding out to such a level where the market doesn't expect this. Because again, look at 2018. We had the Fed begin to raise rates. The market dropped 20% in like 6 weeks, and the Fed started instantly to reverse.
And that's what the markets have come to.
That's what they expect.
The tantrums have yielded results.
But that was when inflation was under 2%. Right. Yeah. So now this is the key, and the market doesn't realize that yet. So on our way down, there's a huge level around 23 to 24,000. If that breaks, you're headed to the 15,700 level, which is your double bottom. And then if that breaks, your next stopping point would be 12 to 13. So I'm very much a trader in that I look at the levels on the charts. And if one level breaks, if support breaks, the likely target is your next support line.
And if 12 breaks, 9?
Yeah, and to me, 9 is a very intriguing number because the 10,000 will be max pain. And the markets, there's something about the markets and the psychology of the markets that it makes it so that the market wants to flush the most people out possible. And to me, where would that be? If you ever saw Bitcoin break 10, people would finally panic and throw up. Everyone says, oh, I'd buy $1 million, Bitcoin or whatever. That's nonsense. Panic would set in, and that's usually where bottoms are made.
Soloway's argument suggests an impending recession in the U.S. economy. And given the persistent high inflation, the Federal Reserve is unlikely to intervene and support the markets as it has in the past. While a self-sustaining economy may not require such interference, the U.S. economy, accustomed to the Fed's continuous market manipulation, faces a different and potentially tragic situation. Consequently, Soloway anticipates further price declines in cryptocurrencies, stocks, and possibly commodities in the second half of the year. However, before Bitcoin investors brace themselves for a significant drop to $9,000, $12,000, or $13,000, Soloway highlights strong support levels at $23,000 and the previous low of $15,700 on FTX. Share your thoughts on these levels in the comments section below. In the upcoming clips from Soloway's discussion with Matt Corey, he delves into his perspectives on Fed Chair Jerome Powell's future actions, stagflation, the potential relief rally for regional banking stocks, and the overall performance of the stock markets.
His comments were, he's on the pause path. I think for me, the market has already anticipated that. To me, the biggest comment that he made was that they will wait until inflation comes significantly lower before even thinking about lowering rates. So I think the market, this is where the mispriced market is for me, and why I remain bearish on the equity markets, is that the market has this understanding that as soon as he pauses, that's one step away from cutting rates. And I don't think that's the case. And again, Jerome Powell has said this till he's blue in the face, that he doesn't want to repeat the mistakes of Paul Volcker in the 80s, right? So to me, rates are not going down unless, like he said, unless we get inflation back in the bag. That's 2%. And I don't see that happening for at least a year or two even. It is back to the stagflation narrative, and I think that's the most likely near-term outlook over the next 6 to 12 months. We have a Fed that, again, likely won't be cutting rates to stimulate growth. They've already said that there'll be a mild recession. Again, just like you mentioned, with him saying transitory, look at what we got. So I have very little confidence in the Fed that they actually know what the economy is going to ultimately do. And it puts us into a situation where inflation stays elevated. And I think people have to understand that you had two parts to inflation. We had the supply chain part, which has been solved. We're not really in that issue anymore, but we still have the higher wages. Wages jumped tremendously since COVID. And that's going to be an inflationary pressure that's going to keep inflation above, in my opinion, just above 3% for at least a year.
And yet you are now saying you're long on the regional banks?
Yes, that's correct. So the way I trade, and again, I'm a shorter term trader, but the way I look at it is you have things that have been beaten down to probably levels where it's a little overbeaten. And so if we just get some sort of relief rally, which is very likely in the banking sector, if things calm down a little bit, I think money flow heads back into them. And likewise, I'm actually short big cap tech. We've seen stocks like NVIDIA, AMD, Tesla start to rip higher again, Microsoft. All these stocks are starting to behave like they were in 2021. And for me, that's a red flag. Just like when I see Pepe in the crypto markets and all these meme coins running crazy, to me, that's not investing, that's gambling. And gambling was a precursor to 1999, 2000 collapse, 2007, except maybe that was in the housing market, but it was still gambling with flipping. People, like regular people, were flipping homes, and they thought that was the easiest money to be made. What happened? We had the collapse and the financial crisis. And so in 2021, we saw that again, and it led to the 2022 declines, and now we're starting to see it again. And so for me, these are flashing warning signs where I start taking advantage on the short side of some of these mega cap tech plays that have gone up way too much, looking for some sort of retrace. But ultimately, I do expect a significant bounce over the next couple of weeks. So it's really probably something where I'm not going to hold it into a recession. So as we get later in the year and I expect a recession, I won't be looking to keep that position, because I do think it'll create more stress on the system with loans going bad. We know about commercial loans and all the craziness that we have there. But one of the confidence builders I have is that the Fed has the government has very clearly shown that they will make depositors whole. And I think that's a confidence builder where people start to say, okay, I don't have to pull my money out of all these banks, because even if it does go under, my deposits are safe. And so that gives me confidence to kind of move into those positions while also taking a contrarian view on a recession, which should attack the big cap tech plays.
Soloway expresses a bearish outlook on Bitcoin and large cap tech stocks, while remaining hopeful for a recovery in regional banking stocks. Last week, regional banking shares, like PacWest Bancorp, witnessed significant gains of over 23%. However, the sector is currently experiencing a retracement. On Wednesday, regional lenders' shares dropped by 2.44%, and the TBW regional banking crisis also lost 1.86%, erasing most of the previous week's gains. It appears that the regional banking fires may not have been completely extinguished, coupled with the ongoing debt ceiling drama. House Republicans insist on spending cuts before raising the debt ceiling beyond $31 trillion. While Democrats argue that Congress must address the debt issue. The uncertainties surrounding the United States economy later this year and early next year, along with Soloway's analysis of the crypto and stock markets, invite your thoughts and observations. Please share them in the comments section below. For more daily dose crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.